In this video, we will look at the intrinsic value of Berkshire Hathaway. Warren Buffett himself mentioned how to calculate the intrinsic value of Berkshire in his annual letter to shareholders. So in this video, first we will look at the exact place in the annual letter to shareholders when he mentioned how to calculate the intrinsic value. Secondly, we will look at some charts. And lastly, we will calculate the intrinsic value for Berkshire for today. So let's get started. First of all, if you are not subscribed to the channel, you can do this by pressing the subscribe button under the video. You will not miss a single new video. Berkshire Hathaway is a great purchase almost at any price, but if we are able to buy it below its intrinsic value, it is very likely that we will have an outsized return. If we buy a stock below its intrinsic or fair value, first we get much lower risk, and there is much higher probability that we will have higher returns. In 2015 annual letter to shareholders, Warren Buffett wrote that Berkshire Hathaway is a great purchase below 120% of its book value. So below this level, the purchase will create value to shareholders. And there were not many times in history when Berkshire traded below 120% of its book value. On this chart, we can see the price-to-book ratio of Berkshire. The red line shows 1.2 of its book value. So there were not many times in history that Berkshire traded below its 120% of its book value. The chart goes back 25 years. As we can see, Berkshire traded below 120% in dot-com bubble, in 2008 financial crisis, in 2012, and of course during the COVID crisis of 2020. So if you bought Berkshire at these times, when it was below 120% of its book value, you would get a much higher return. So almost every time Berkshire reached this point, it was the market bottom. If we add Berkshire Hathaway price to the chart, we can see that Berkshire was a great purchase almost at any time, but if you bought it below its intrinsic value, you would get a much higher return. So almost all the time, the purchase was around market bottom. Okay, now let's try to come up with a fair value or intrinsic value for Berkshire today. At the moment of writing the video, the price of Berkshire Hathaway Class B shares are trading at $311 per share. The price to book value of Berkshire is 1.348. The difference between 1.2 of book value is close to 11%. We get the intrinsic value of Berkshire Hathaway of close to $277 per share. So at this price, it is very likely that Berkshire Hathaway will start to repurchase its shares. It repurchased its shares at even higher price to book value, at 1.3 for example. But at 1.2 and lower, the shares buybacks may increase. Okay, in this video, we have calculated the intrinsic value of Berkshire Hathaway. If we are able to buy it below its intrinsic or fair value, it is very likely that we will have a much higher return. Again, Berkshire Hathaway is a great purchase almost at any price, but if we are able to buy it below its intrinsic value, it is very likely that it will be even a better purchase, even with a higher return. Also, I have made a video how another super investor, Terry Smith, selects his stocks. Here is the video. If you are not subscribed to the channel, you can do this by pressing this button right here. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.